Welcome to this special edition of World Weekly, coming to you as a video and a podcast, with me, Gideon Rachman. We devote today to a discussion of the state of the world economy, and with me in the studio are Lionel Barber, editor of the Financial Times, and Chris Giles, our economics editor. All three of us were in Davos last week for the World Economic Forum, and there, it has to be said, the mood was mildly upbeat. But just a few days later came the news that the US economy had actually shrunk towards the end of last year. So what's going on? Lionel, were people in Davos just deluding themselves, and in fact the real economy is not recovering?
I think it was the sigh of relief, Davos. This time, the sense that the European Central Bank's intervention and promise of unlimited support to intervene in the bond market with conditions has eliminated what they call tail risk. Now, having said that, if you look at more positive signs in America, yes, the last GDP figures were disappointing, but there is a sense that the economy has turned, real estate prices improving, and then China continues to grow. I mean, somehow magically, always 8%.
Chris, I got the sense that maybe by the end of Davos, I think you wrote this, people were thinking that actually they needed to dial back the optimism a little bit because there was such a sort of early euphoria almost that, yeah, we've somehow survived 2012.
Yes, on the big global economy debate, there was a real consensus among sort of big world leaders in economics, so the head of the International Monetary Fund, head of the OECD, etc., that had gone too far. There were still big risks out there. There's still a lot needed to be done, even if the imminent breakup of the euro has been taken off the table and the imminent default of the US has essentially been taken off the table as well.
And I kind of had the sense that there's a change in mood about the US. Seemed to me it was related to a couple of things. One, the re-election of Obama and the certainty that brings, but also shale gas.
Actually, I picked it up in a trip to the United States in the week before the American presidential election, and I spoke to 5 top bankers on Wall Street, people who run these institutions, and one of them said, you know the difference between America and Europe? We've fixed our banking system and we fixed our energy problem. That is, we got shale gas. And you know, the other thing we got is Canada, big resource-rich country on the north, and Mexico, which is the big hot economy right now. And that's going to put us in great shape. And if we could just get the politicians to agree on a debt ceiling reduction plus a decent package on reducing the deficit medium term, we're sitting very pretty.
Yes, I heard the Australian Foreign Minister saying America's just one debt deal away from banishing all talk of American decline. But Chris, do you think that actually is also overdone?
Clearly the US have got to sort out particularly their medical system. In the short term they can certainly kick the can down the road. People are now expecting the February-March deadlines not to be the great crisis, and at least we'll move through this year. So I think that's where the positive mood comes from, at least in the short term. But there is obviously something that needs to be done. The medium-term fiscal position in the US is more difficult than it is in the Eurozone.
And also, by the way, if the Republicans and Democrats can come together, signs, by the way, the Republicans don't want to press the nuclear switch on the debt ceiling, then things could really be very positive, I think, in America.
Okay, Chris, just Asia. I mean, we talked a lot about the US because there does seem to change in mood there. Asia, it's a slightly different thing, and particularly China. I think, again, people were fearing a blow-up, but that doesn't seem to have happened.
The Chinese were in Davos. The Deputy Governor of the Central Bank was there saying, again, growth would be 8% after the dip to 7.5% in 2012. It seems that the economy can keep doing this, and there are signs that it's moving more towards domestic growth. China doesn't need the traditional Western economies to be growing very rapidly for its own growth, at least in the short term. And now we're seeing retail spending rising pretty rapidly in China. Then I think you can expect that economy to keep going forward at this sort of rate. But whether you actually see it bringing the rest of Asia with it, whether Japan, for example, can actually get the sort of growth spurt it absolutely desperately needs, I think is highly questionable.
Okay, well, thank you very much, Chris, and thanks, Lionel. That's all we have time for this week's bi-media edition of World Weekly. And to subscribe to the podcast, please go to ft.com/worldweekly.